Greetings, my friends. Today we are going to talk about the state of the market, and I want to focus specifically on mortgage interest rates. I know it's the thing that's on the top of everyone's mind all the time. Kind of not, but specifically what's gone on with them and how it's been different from what a lot of people expected and projected, because it is. And we're in a very interesting place right now, kind of almost halfway through the year in 2023. So before we get to this guy, who I'm tired of seeing, just real quick, this is a market update, which is where I just go real low tech and just talk to you through the webcam and share my screen and go look at some news and market stats and what's going on. There's a time and a place for the flashy edits, which please go check out the home tours and dispatch. I love that stuff. But there's also a time and place to just sit down and be very candid and frank and very low tech. And that's what I do in these. So if that's not of interest to you, I totally get it. But if you're interested in learning more about what's going on in the national real estate market, but really Denver specifically, that's where I do that. I do this about once a month. So what's going on? First of all, interest rates. So I'm recording this on Thursday, June 15th. Yesterday, this guy, Jerome Powell, who we talk about all the time, I'm going to move myself over there, announces interest rates will remain unchanged as inflation eases. Yay! That's positive news, right? Kind of. If you've watched this channel before, if you've heard me talk about this, and if you followed this story, you know that that's why they keep hiking interest rates, is because it's to get inflation down. It's a little seesaw. And so in order to get inflation down, they basically have to make it economically worse here in America. And that will control inflation because people will stop spending money as much. Are they trying to bring on a recession? Kind of, sort of, basically. Are we in a recession? I don't know. People have been telling me we are for a year. Some people have been saying it's coming for 2 years. I don't know. But finally, after all of these rate hikes, I don't know how many there have been, but it's been almost a year. I mean, they started doing it really in late May, June of 2022. Finally, it's working. So one would think, great, the markets will respond in kind. Now, mortgage rates, because of this news, will drop. Well, not exactly. Okay, so Powell said, hey, we're not going to raise rates. But in a surprise move, the Fed signaled that it may raise rates twice more this year. So they're not doing it this time, but they might do it twice more this year, beginning as soon as next month. So what's going on is the market, especially mortgage rates, anticipate what's going to happen. So they had anticipated and priced ahead of time that Powell would not raise the interest rates in this meeting, and they were right. So basically, because of that, because they were anticipating this time there would not be a rate hike, mortgage rates didn't go up. They actually came down just a little bit. But then after yesterday's comments, when he said, well, we're not hiking them now, they're like, great, we know, but we might keep doing it. Markets responded poorly, and interest rates actually rose a bit again. So they are up now. By the way, when we look at what interest rates are, in the 30-year fixed is kind of the benchmark, where we say, okay, what are rates at? You're going to get a different number from every different source because it depends on a lot of things. The size of the loan, your credit, how much money you're putting down, debt to income ratio, all that other stuff. Also, there's a difference between interest rate and APR. You're going to see both of those things quoted. They don't mean the same thing. They kind of do. Interest rate is the pure interest rate. This is what the interest rate of this loan is at this time. APR is that plus all these other fees worked in that you will have to pay as part of a mortgage. It can be mortgage insurance. It could be other fees, closing costs that have been rolled into the loan, that type of thing. So we're just going to talk about mortgage rates, but all that to say, these are going to be different depending on where you look. And when you go to buy a home, the rate that is quoted here or in the national news will be different from whatever rate you're getting, guaranteed. Guaranteed, because you can also pay money to buy down the mortgage rate too, which happens all the time. And so all that to say, the point being right now, 30-year fix. This is, I went with bankrate.com here because this is matches better with what I'm seeing people actually get than anything else. It was just below 7. It jumped just over 7%. So mortgage rates are at or around 7% right now. And you'll see what happens if we use this graph. Basically, they've seesawed a little bit. Back in May, they were a bit lower. And these are all estimates, like I said. But it hasn't changed that much since February, really. We were in the high 6s in February. It's come up a little bit. It's come down. You know, some people were saying somewhere in here, April, you get 6.5 or even less. Now we're around 7% for the 30-year fixed. You can do, not a lot of people are doing a 15-year fix or a 10-year fix. The ARM is very interesting to me. That's the adjustable rate mortgage. That is the instrument that was largely, partially responsible for the financial crisis of 2008. It's not a bad thing if used correctly. It means your interest rate can and will change after the first period. So this would be 5 years on the 5/1 ARM. That's why it's so much lower, because you're taking on more risk. They're saying, we're going to give you almost a whole point less, but we can raise it after 5 years to see where the markets are then, basically. If the markets are better, it could go down. I haven't heard of that happening a whole lot, but it can. And but if rates rise, then your mortgage payment will go up after that 5 years. So the 5-year ARM I don't love. There is a 10-year ARM that gives you 10 years at whatever rate you're getting, which I like more because 10 years is a long, long time. 5 years, you're probably safe too, but 10 years, definitely, there's going to be enough that changes that there's an opportunity for a refinance in there before you hit that adjustable rate period, which is all we're looking at with any of this. With a temporary loan buy down, an ARM, anything else like that, we're just looking to buy time until interest rates drop and you can refinance, which is a very cheap, very easy process, into a better long-term 30-year fixed rate. So this is what's going on. Mortgage rates jumped a little bit again. They've been much higher than they were last year for the majority of this year. And, you know, what does that mean? What is that doing to the market? And first of all, how is it different from what people expected? A lot of people, the projections will be all over the board, but a lot of people expected them to be easing by this time of year, at least be in the low 6s. A lot of people said they'll be in the 5s, somewhere in the 5s, probably high 5s by mid-year this year. And some expectations were they'd be in the low 5s or even somewhere in the 4s by the end of the year. That will not happen. And I don't know for sure, but because of where they're at right now, unless we have a widespread recession, like big time, and we have bigger problems, then you're not going to see interest rates on the 30-year fix without buying them down in the 4s by the end of this year. By the end of next year, sure, maybe. That's a lot of time. Anything could happen. What we're shooting for now is to be somewhere in the 5s by the end of the year. That would still be good. That would mean anybody who got a loan at a 7% interest rate, if it's 5.8 and you refi, you're saving a lot of money on your monthly payment. I have one mortgage right now at 6.5, got it last year. And if it goes into the 5s, I'm probably refinancing. I'll play the numbers, but the small amount of money that you're going to need to pay in closing costs to refinance will be well worth it to somewhat dramatically lower your monthly payment. So that's what's going on. Mortgage rates just haven't dropped as fast as people thought, and they're sticking up there. So, and with a few more hikes potentially on the way, we'll see what happens. They could stick up around 7 for a lot longer. So what is that doing with the actual housing market? Well, you kind of know it's making fewer homes sell. That's what's going on. This is the June 2023 DMAR Market Trends Report. This is just a snapshot here. So when you see these arrows right here, it's talking about what is going, and I can draw it too on this thing. This means prices are up 2.5% from the previous month. So all these arrows on this graph are going to be what happened from the previous month. And really the market got stronger from May to June, which you kind of expected because May to June should be the peak of the selling season, where the spring market is really reaching a crescendo, and then we move into the summer market. So active listings came up. That was at 13%. New listings were up, and pending sales are up too. So everything's up month over month, except for you got median days in the MLS. That's down a little bit. Month of inventory is basically flat. We're at 1.25. We were just below 1 earlier in the year. Oh, I got to get off this thing so I can scroll down. Perfect. But that's month over month. But I also like to look, and we can get this a little bit bigger here, I think, year over year. What does that mean? What's going on year over year? So this is a whole market overview. It's a lot of stats, but we're going to look at what the numbers are year over year right now, because last year at this time, interest rates were just starting to rise. So when you look at attached and detached, closed properties year over year are down I blocked it out there, but it's 28% from last year to this year. Prices are down somewhere 2 to 4% year over year. And actually a few months ago, that was more like 6, 7%. So that's actually improving a little bit. New listings are way down. Active listings are way up. That's new listings on the bottom, active listings up there on the top. What's going on? There's a little bit of gridlock with mortgage rates where people are saying, oh, I kind of want to move. People who want to move are going to move regardless. Like they're going to find a way. People who need to move. But the other people who are kind of on the fence would kind of like a new place, but man, I'm locked in at 3.2 on my old place. Do I really want to take out a loan for 7%? A lot of people are saying no. And that's why sales volume has dropped so much. I am bad at circling. I shouldn't even do that. But sales volume's down 30%. Closed transactions are down 28, almost 29%. That's what's going on. There's just fewer deals that are happening out of there because of these market dynamics. So what does that mean for you if you're looking to buy or sell? I'm going to give you my thoughts. First of all, and people will say, well, a real estate agent's always going to tell you to buy or sell. Yeah, I get that. So, take everything through the lens of what you actually want and need. I have never tried to make someone buy a home who did not previously express interest in buying a home. It would be an uphill battle. I mean, that's a fairly significant transaction and decision to try to convince someone to do that who didn't already want to do it. Probably not the best use of my time, to be honest with you. But what I do is try to help people who say, here's kind of what I want to do. What's the best way to do it? Should I do it? What makes sense? So if you're a home buyer, I won't repeat the refrain ad nauseum, but I will say it's, if you want to buy, if you need to buy, the interest rate should not scare you away, because the interest rate is the thing that you will be able to change on your home in the future. You won't be able to change what home you bought, and you won't be able to change the purchase price you got it at. And right now, prices are at a bit of a discount, at least over the last year, because interest rates are so high. You have to be able to afford the monthly payment. But if you can, and you're like, it's not great right now, but I can afford it, and if and when rates drop, because they will at some point, then I can refi, still be in this house that I like, still got it for a better price than I would have this time last year, still didn't have to do a bidding war because those are happening less and less. You're just not seeing it that much. And I got the house. And now I can, whenever the market decides I can refi into a better rate. I did my first 2-1 buy down for a first-time home buyer a week or two ago, meaning because the homes are sitting on the market longer, you go to the seller and say, hey, we'll buy the house, but you give us a concession of X number of dollars that's going to cover a rate buy down for our first 2 years. A 2-1 buy down, which is very popular right now, gives you 2% lower rate for the first year and 1% lower for the second year, till jumping to where the market rate would be the third year. So right now it'd be about 5% the first year, 6% the second year, then up to 7%. The idea being, like we said before, you're trying to buy time. You have to be prepared that if there's no refi opportunity in there, you got to be ready for that payment the third year. But a couple of years is a good amount of time to figure out something to buy you a little bit of time. Realistically, we're probably going to see a rate change in the next 2 years, something significant where you'll have an opportunity to do that. So that's an instrument you can use where these folks didn't have to go through a bidding war. We were able to get the place under contract, have a very buyer-friendly contract rather than waiving a bunch of concessions and stuff like that. And we were able to just get them the house and get in for a reasonable payment for those first few years. That's one thing that's happening. We're also seeing, just anecdotally in the market, homes are sticking this time of year. I've been doing a lot of showings lately, and we're seeing you get requests for feedback after you do a showing if there's not a whole lot of activity. If there's a whole lot of activity on a property, people don't care about feedback. They're like, I already got 3 offers. I don't need to know what everyone thought of the property who viewed it. Man, oh man, I've been getting calls and text messages left and right about feedback. Is your buyer interested? Is there anything we can do? Because there's just not as much activity out there. So that's why, as a buyer, this is actually a good time to at least go out and look and see what can happen. I'm under contract with another first-time home buyer where it's a higher price point, but we were able to negotiate a great deal for him. and we got the appraisal back, and it's appraising $35,000 above our purchase price. So the appraiser is saying this is actually worth a lot more than you paid for it because of the market dynamics right now. So if you're a seller, what do you need to do? What do you want to do? What is your next step? That's what I'm asking every home seller right now. What is the goal? What's the next step after you sell this place? And then we're going to figure out if it's a good time to do it or not. You still can make a good chunk of money, especially if you bought a few years ago on your home. We're all clouded by the bidding wars. Everybody wanted to get that. It's not happening as much anymore, but you can still sell your home for essentially top dollar if you present it well, if you price it properly, and if you market the crap out of it. That is the thing I'm focusing on so much right now with home sellers. We're going to market this so well. We're going to present it well, and then we're going to get it in front of as many potential buyers as possible. That's the way to maximize your investment. That's the way to do it. You got to do it right. You have to be good at your job now as a real estate agent. I think I've mentioned that before. Not that you didn't the last few years, but it was in a different way. And so great. It's really exciting. We get to really earn our keep, and we get to really flex our muscles and come in and stage the home and, show you what people care about, what people don't care about, talk about which improvements to do, if any, and then really utilize video marketing to get that all over the place and get as many eyeballs on it as possible. So that's really important if you are going to sell your home right now, if you need to sell your home. And if you do it right, you can still get a bidding war. I don't know for sure. It might not be 30 offers, but I have a colleague who's got a listing going live this weekend. He priced it so well. I mean, it's a very smart pricing strategy where they went. And it is, I think they already have 30 groups coming through this Saturday. And it's going to be a hot one. So there you go. There you have it. That's it. Thanks for checking in. We'll see what happens with interest rates and what Jerome Powell tells us we can do. Otherwise, I will talk to you guys soon.